What is going on YouTube? It's Sank and I make videos on the stock market. Guys, I've got a jam-packed one for you as always, but before I get cracking, if you don't have a Trading 212 account, please check out my link down below, sign up and get yourself a free share of stock. So it's been another fantastic day in the stock market, and those of you who jumped into the plays that gave over the weekend would know that they've surged higher. So I know your portfolios are looking very good right now. But I want to talk about one of our MVP plays, and that is Alpine Technologies. Now I know a lot of us are in this play and they've had a fantastic day, right? Up over 40%. Now whenever one of our plays blows up like that, we want to understand what's happened so we can strategize and plan for the future, right? Because this is a play with a lot of potential in 2021 and going beyond that. So we want to make sure that we get in at all the best opportunities and ride this up. And due to popular demand, at the end of the video I'm going to be covering US capital gains tax, so stick around for that. So up on screen we have Alpine Technologies, and I'm very proud to say they have a price of $4.43. So what an amazing run it's been for Alpine 4. A lot of us have made a lot of money on this play. Now the reason why they've had such a big jump in their share price today is because they've gone ahead and acquired another drone company, right, called Vayu. And what I want to do is I want to talk about who Vayu are, how this is going to integrate into their existing business and their other drone company, Impossible Aerospace, and what we can expect from Alpine 4 going forward. So this brand new addition to Alpine Technologies business, Vayu, the drone manufacturer, what they'll do, what they pride themselves on is solving critical logistical challenges. What do I mean by that? I mean they're going to supply food, medicine, infrastructure to hard to reach places. So if we take the medical sector as an example, they can distribute supplies to remote areas. Now they can do this because their drones are specifically designed for this kind of thing, that they can fly a lot longer, they can carry a lot more weight, and also they have the ability to vertically take off and land, which means they can land basically anywhere. Now I think Vayu is going to integrate very well with Alpine Technologies and their existing portfolio. You've got to remember Alpine Technologies own Quality Circuit Assembly, the manufacturer of printed circuit boards, which are going to be used in Vayu, right? So there's going to be cost savings and improved supply chain there. Now one of the standout things about Vayu, right, is they have their autopilot software. So basically users on their app can predetermine the route of the Vayu drones, and then they can just let the drones do their thing. Now this is technology, right, that Impossible Aerospace don't have, and they're going to be able to now integrate that into Impossible Aerospace and improve the offering that Impossible Aerospace gives its clients. Right now, Vayu operate in Australia, Canada and Sub-Saharan Africa. This is going to give Impossible Aerospace a whole new geographic reach, right? There's going to be the potential that they can go out and win new business in these areas, and ultimately that's going to help Alpine Technologies as a whole gain more market share in the UAV sector. One of the key benefits of this acquisition of Vayu, and one of my personal favorites, is that Vayu's drones can carry a lot more weight than Impossible Aerospace's can. Now, to put that into perspective, Impossible Aerospace's drones can carry about 6 pounds. Now, Vayu's drones can carry about 44 pounds. So that's a huge uplift, right? From 6 pounds to 44 pounds in weight. Now, this is going to have massive benefits to Impossible Aerospace because they're going to be able to use Vayu's drones for that last mile of delivery. Now they both operate in that medical sector, so it's really going to help boost their business. So in terms of what Alpine Technologies business now looks like after the 40% increase in their share price, they are now a $500 million market cap company. So this is huge, right? They've added a lot of value to their business because of that share price increase. Now their sales for next year are still forecasted around 35 million. This takes them to a price of sales of around 14 times. So now obviously that does make them a more expensive stock, and they do carry more risk of volatility as we close out this week. So in terms of what I'm personally doing, I'm not buying any more Alpine Technologies right now. I'm built out in my position, but what I'm going to do is I'm going to wait for the next dip, 5-10%, and consider buying in again, because going into 2021 I think this has a fantastic road ahead of it. Now I just want to put on your radar, their CEO said that they have the potential to make billions of revenue in the next couple of years. So this is going to be a high performing asset, right, as in the years to come. Now he does believe in that growth in the UAV sector. He thinks, you know, there's the potential to expand into deliveries, food deliveries, parcel deliveries, and this could open up billions and billions in potential market. Now also want to put on your radar that a potential catalyst could be easing of regulations of autonomous flying. So we want to look out for that, because if there's any announcement or note about that, that share price is going to rise off the back of that news. So in my earlier video today, I covered UK tax on capital gains when you sell stocks. Now I'm covering US tax on capital gains. So when you go ahead and sell a stock, you're either going to have to pay short-term capital gains tax or long-term capital gains tax. So short-term capital gains tax is when you've held the asset for less than 1 year. So you bought the stock less than 1 year ago and then you've gone ahead and sold that stock. So you're going to have to pay on the profits that you make off selling the stock. You're going to have to pay taxes equal to the ordinary income tax rate that you currently pay. Now it gets a little bit more complicated if you've held that stock for longer than a year and then you've sold the stock, because you're either going to pay 0%, 15% or 20% on the profits that you've made from selling the stock. So stick with me on this one. So it either depends on your filing status, right? If you're single, if you're married and filing jointly, married and filing separately, or if you're the head of household, you're going to pay different tax rates depending on that. So for example, let's assume you're single, you will pay 0% on those long-term capital gains tax if you earn less than $40,400 per year. You're going to pay 15% if you earn between $40,400 and $445,850. You're going to pay 15%. And if you earn above that, so if you earn above $445,850, you're going to pay 20% on the gains that you've made from selling that stock. Now, these are 2021 tax year numbers. It's going to change each and every year. Now, on top of this, you might be liable to pay what they call net investment income tax of 3.8%. Now, in terms of net income investment, those are things like your dividends, your capital gains, your rental income, and your royalties. Now, this all depends on your filing status again. So, for example, if you're single and your net investment income is greater than $200,000, you have to pay the 3.8% on top of the capital gains tax. So that brings us to the end of the video. Please hit a like, it really helps the channel out. If you're new, do go ahead and hit that subscribe button. I post each and every day. Guys, the aim is to end 2020 with a bang, because that's how we mean to start 2021 and continue. So I've got a lot more plays for you guys to jump into as we close out this year. And as I always say, do check into the channel each and every day. The stock market is rapidly moving. You never want to miss a beat. And I'll catch you guys in the next one.